Hello everyone, thanks for watching How's the Market for October 2020. Well, as we finally approach the election coming up next month, a lot of people were predicting a massive slowdown in the real estate market. Well, I'm here to tell you that's not happening at all. As a matter of fact, we did see a little bit of a slowdown at the end of August, but right after Labor Day, it really picked up. A lot of buyers continuing their search. New buyers coming into the market, they're looking to buy an absolutely no inventory at all. If you take a look at this graph, this shows the showings that have been happening in Massachusetts, always on the rise. In this case here, you can see a little bit of a dip. We are starting to see more open houses right now as listing agents are navigating a way to hold a house open in a safe way. Regardless, homes are going in the Melrose, Malden, Wakefield area, multiple offers, sometimes as high as 20, 30 offers. Houses priced in the 600s going for over $100,000 over asking. There just isn't enough inventory. We need more inventory. If you had any thoughts of selling your house, call your local realtor, call us, call somebody, because we need the inventory. You will have no problem selling. We have a special program in place that will allow you to make the move and minimize your chances of having to move twice. So if you're interested in learning more about that, give us a call. So let's take a look at what's going on a national front. Taking a look at unemployment, that's what we want to take a look at first in terms of a big view and in terms of a national level. 8.4% now, according to BLS and the Wall Street Journal survey of economists. Everyone is projecting a lowering in unemployment. Obviously, if one person's unemployed, it's too many, but at least we're seeing the trend going in the right direction. Take a look at our next slide here, the BLS unemployment rate. Right now we're at 8.4%, which is 4 percentage points more than what we saw in March. Interesting quote here from the Wall Street Journal. The U.S. economy and labor market are recovering from the coronavirus-related downturn more quickly than previously expected, economists said in a monthly survey recently. Business and academic economists polled by the Wall Street Journal expect gross domestic product to increase at an annualized rate of 23.9% in the third quarter. That's up sharply from an expectation of an 18.3% growth rate in the previous survey. That's a direct quote from the Wall Street Journal. Now, this next slide talks about the housing market recovery index. So this is based on 4 components: demand, supply, price, time on market. Well, you're definitely seeing a V-shaped recovery here. Right now, the index lies at 107.7, which is actually higher than it was pre-COVID. This is on a national level. I think if you were to see this here locally in the Boston area, you would see a very similar type of recovery, if not maybe even a sharper recovery than as we typically here in the Boston area outpace the national numbers. Interesting comparison here as we take a look at what certain organizations were predicting for home prices, and this is back to when the pandemic hit us back in March and April. What Fannie Mae, Zillow, and CoreLogic were predicting on the future of home prices. Fannie Mae was seeing a small increase of 0.5%. Now they're at 4.4. Zillow was seeing a decrease of 3%. Now they're seeing an increase of 3.6. CoreLogic was the big bear of them all at prices decreasing 6.5%. Now they're predicting an increase of 0.5%. And if you take a look at the next slide here, the projections on future home prices, there's some more entities here with their predictions. All of them except for the one house is predicting an increase in value over the current year or over the next 12 months. Another thing that people ask me about a lot is, what is, how do prices compare now compared to, a couple of years ago? It just seems like it's impossible to afford a home right now. Well, on a national level, actually affordability is, homes are more affordable now than they were back in 2007 and in 2008, and even more recently in 2018. And that's all based on where interest rates are and then where prices are. So it may look a little bit differently here locally, but I thought that was interesting to point out on a national level. Here's the challenge that we have moving forward, and that's in housing supply. Year over year, the last 12 months, we're at a 21% shortage, and that is of July, for housing supply. Typically here in the Melrose, Wakefield, Malden area, we hover around between 1 and 3 months worth of housing that's available. Right now we're a little over a month, which means that it would take a month to sell off all the homes in Melrose, given none others came on the market for sale. And that's what's driving this market. There's a lot of demand and a lot of motivation to buy with low interest rates, and unfortunately there's just nothing to buy. We need more inventory desperately. So that's what it looks like on a national level. Here in Melrose, Malden, values are up between 5 and 10%. Wakefield, it is a rock fight out there for buyers. We have different strategies and proactive systems designed in place to help find our buyers a home in a very proactive way, not necessarily relying on typical retail MLS inventory. If you'd like to learn more about it, please reach out. Hey, thanks so much for watching. Any questions or anything, please feel free to DM me or shoot me an email at billb@thebillbutlergroup.com, or shoot a text to me or give me a call at 617-771-9376. Thanks so much for watching. We'll see you next time. Take care. Bye-bye.